What if I told you that you could retire in the next 5 years while only starting with $25,000 to $50,000 today and being able to retire early? If that's of interest to you, then this episode is exactly what you came to look for. So let's address the elephant in the room. I have not recorded new solo episodes in quite some time. As you guys may or may not know, I moved to Dallas recently. And so there's been maybe on another episode, I'll catch you guys up to speed on all those things. But it's just been busy, quite frankly, nothing more, nothing less. I mean, we've been incredibly consistent on this channel. Luckily, we've still been doing the podcast every single week. So at least I felt validated in that regard. And if you're watching this and you're OG watcher or listener, thank you so much. I appreciate the patience as we get back on the saddle. And I hope that the other content has been fruitful as we get back to it. So I was on a podcast recently and I got asked the question, if you wanted to retire in 5 years with $20,000 in monthly cash flow, which is substantial considering traditional retirement terms, how would you do it? Right? And that's what we're going to break down on today's episode. So just to kind of set the stage, this is going to be a combination of leveraging the stock market, leveraging real estate, and also acquiring a business that you can own but not run to ultimately get to your cash flow target. And we are going to break it down in phases so you know exactly how we are planning to do it. All right, first things first, let's start off with how much money you're going to need to get this done, right? So I said 25 to 50 is the range. 25,000 is going to be aggressive. You're probably going to be very leveraged. And it's going to be riskier, but it is possible. 50,000 is more conservative, but it still requires some leverage. And just for context, guys, we're saying being able to retire in 5 years, right? So being able to retire in 5 years, for those of you saying like, oh my gosh, $50,000 is still a lot of money. We're talking about retiring in 5 years. And not to mention, I'm still going to give you recommendations on sources of capital. So this can come from savings that you have. It can come from 401ks or IRAs that you roll over into a self-directed retirement account that'll give you more flexibility on how to leverage it. This could even be a HELOC or a personal line of credit, right? Or friends and family, or maybe angel investors to partner on some of the real estate deals or business deals in order to get the capital you need to start this process. Now, I might not necessarily tell them like, hey, I need to borrow this money so I can retire, but make it make sense for them when it comes to sharing in the profits or the returns of the business that you acquire or the real estate that you acquire. All right, so let's start with phase one. All right, in year one, right, start with a $50,000 investment into your brokerage account. And ultimately, this is going to build to $150,000 to a $250,000 brokerage account. Okay. And we're going to use a combination of ETFs and dividend stocks, for example, like VTI, SCHD, and JPI, right, are all examples of investments we can use inside of this account. Okay. Our goal is to aim for 7 to 10% returns and reinvest all dividends. Okay. Once the account reaches about 150 to 250, right, thousand, we want to get a margin loan or a securities-backed line of credit, right, ideally at a 3 to 6% interest rate, right, because now this is going to give us the money we need for the down payment on the larger plays like the real estate or the business acquisition. Okay, that's phase one. Phase two is we're going to use the securities-backed line of credit to acquire real estate. Okay, so let's go through an example. So we're going to borrow $50,000 against the value of our portfolio, right? For 20% down on a $250,000 duplex, right? This duplex is going to cash flow about $500 a month, right? And that's net of all expenses. And then we're going to repeat this 3 to 4 times over 2 years, right? To ultimately get that portion of our goal to about $2,000 a month in cash flow. Now, some of the tactics you're going to use to make this happen is you're going to use house hacking, right? Or small multifamily units so that way you can get in the property, live in one of the units, rent some of them out, right? And after a year of living there, you can put another tenant in that other unit, and then rinse and repeat this, right, each year. You can also consider using a debt service coverage loan or asset-based loans, right, to give you more flexibility, and focus on markets with good rent to price ratios like the Midwest or the Southeast. All right, so let's get into phase three. acquiring a cash flow producing business using creative financing. So what are some examples of businesses that would be good in this strategy that have great cash flow, that are easy to get into, easy being relative, but home services, car wash, laundromat, vending machines, short-term rentals, or short-term rental management company, I should say, right? These are all great examples of businesses that you could potentially acquire that could have some strong cash flow numbers that could help aid in this goal that you have of getting to your $20,000 a month in positive cash flow, right? So let's look at some deal dynamics, right? Let's say you look to acquire a business that's like $300,000, right? Does $100,000 in seller discretionary earnings, and $100,000 in seller discretionary earnings means that's the money that comes to the owner after everything, the profits, if you will. And then we probably want to do a seller financing deal where 80%, right? So that's about $240,000 if my math is right, over 5 years. And for those of y'all who are not familiar with that means that instead of just buying the business outright, the business owner becomes the bank, and he or she seller finances the deal, and you're paying him out that $240,000 over a 5-year period, right? You bring $60K to the deal from the securities backed line of credit or cash flow from the real estate, or you could even consider getting an SBA loan if necessary. Okay. Now when we look at monthly cash flow, right? We're expecting or targeting between like $6,000 to $7,000, right? After paying for the seller note and the minimal staff. And then ultimately the business grows at a clip of around 10 to 15% with optimized systems or an hired operator. Okay. So now at this point, we have $2K a month in cash flow from real estate. We have $7K a month in cash flow from the business and about $1K from portfolio dividends that we are currently reinvesting. Okay. All right, let's jump into phase 4. So phase 4, reinvest, repeat, and optimize. All right, so we're going to use real estate equity and cash flow to buy more property. Then we're going to use business profits to buy a second business and use seller financing again. Now, keep in mind, we're trying to get to $20,000 a month in cash flow in 5 years, right? So the cash flow that we're receiving now, we want to use 100% of that as much as we can to buy more real estate, to buy more businesses, and just to grow our wealth so that we can get to that cash flow target earlier. Don't get premature and start using this money early. Yes, you're receiving some strong cash flow numbers, but the only way to get to $20,000 a month, which if you put it in perspective, that's $240,000 a year. If you were to try to do that from the stock market, $240,000 a year, following the 4% rule, you would need like $6 million invested. This strategy that I'm breaking down for you guys is super beneficial because you can get some extremely strong cash flow numbers that would be unprecedented or unrealistic unless you had a very sizable portfolio, right? But back to my point, we're going to use real estate equity and cash flow to buy more property, right? We're going to use business profits to buy a second business and use seller financing again. We're going to continue investing excess cash flow into the portfolio and then back into the securities line of credit, right? So that we can have more money to use for these strategies, right? And in addition to that, we definitely want to take advantage of tax strategy in the way of depreciation because that's going to lower our taxable income, right? And if it lowers our taxable income, ultimately that means more money for us, okay? So let's kind of just break down the timeline of this $20,000 a month in positive cash flow, okay? So year one, right, we're going to have that $50,000 portfolio that we want to get to maybe around $100K. Now, when you see these portfolio numbers grow, it's going to come from a combination of returns, right? 7 to 10%. Dividend reinvestment, and also the assumption that you have some type of side hustle or some type of income source that's going to allow you to grow this base. You're trying to do something in 5 years that takes people 40 years to do. So it's going to require some money and some hustle. Okay. So because when you see these numbers, I don't want you to be like, well, how does he expect me to get from $100,000 portfolio to 150? I expect you to invest, right? Okay, cool. So let's just level set. Year one, $50,000 portfolio, get it to $100,000. You have zero real estate cash flow at that point, zero business cash flow, right? At that point in year one, you're just investing to build your base. In year two, okay, we have $150,000 portfolio. And at that point, we would have been able to borrow against the portfolio for that duplex. And now we'll have about $1,000 in cash flow from the real estate portfolio, right? Or the real estate investment. Year 3, that portfolio should be closer to $200,000. And now we've continued to double down on the real estate, which should get us to about $2,000 a month in positive cash flow. And this should also be the year that we're borrowing against our portfolio in order to invest in the business that we want to acquire, which starting out would probably give us about $4,000 a month in positive cash flow for a grand total of $6,000 a month in positive cash flow between the real estate and the business. Okay. All right. Now, year 4, that portfolio base should be around $250,000, right? And we're expecting about $3,000 a month from the real estate cash flow. Again, we're going to continue to just double down on the strategy that we have, leveraging the equity from the real estate. And then our business cash flow, we're expecting it to be north of $7,000 per month. And then about a total of $10,000 per month in positive cash flow in year 4. And then year 5, that portfolio base should be right around $300,000. Because remember, we're reinvesting aggressively into the portfolio to give us that base to be able to leverage. Then we're expecting our real estate cash flow to be north of $4,000 a month. Our business cash flow to be north of $12,000 a month, right? But now, because we're in year 5, instead of just reinvesting the dividends, if we want to start receiving those dividends in cash flow, we can also start doing that, which will get us to our grand total of $20,000 a month in cash flow. Okay. I'll be fully transparent with you. This is possible, but it requires hustle. It requires research and the willingness to take calculated risk, right? Deal with market fluctuations, because the market is not going to just go up and to the right during this scenario, which is why we got to be smart, not be over leveraged, and continue to reinvest in the portfolio so that we have that cushion as the market ebbs and flows. Okay. It requires you to operate a business, right? You might be able to put an operator in there at some point, but if you want to keep it as lean as possible, you're probably going to have to be a little more hands-on in the beginning, right? And even if you are keeping it lean or put an operator in place, you're going to need to understand the business before you can delegate it anyway, right? And that all carries exposure and leverage that you have to take into consideration in this scenario, right? But with education, right? Maybe hiring an advisory team and reinvesting as much as you can, especially over those 5 years, right? This is 100% achievable. Okay. If this video is valuable to you and you want more videos like that, make sure that you like and subscribe this video. And maybe I'll even throw in a bonus or a freebie at some point. Maybe I'll do another video and come back and do like a business evaluation checklist or something like that. If I'm lucky, I'll do it before the video goes live, not making any promises. But I'll tell you what, if you tell me that you like videos like this, I'll make sure to come back and add this freebie, okay? Thank you guys so much for tuning into this video. Remember, financial freedom is for sale if you're willing to pay the price. And we just broke down the price for you live on this show.